Well, speaking of business in the U.S., currency trading volume around the world has hit a $4 trillion mark, fueled in part by investors looking to diversify. We partner now with the FT to bring you Lex on Bloomberg. You got a sneak peek at the Financial Times' flagship column a day early. Edward Hadas joining us now live from London. Edward, thanks for joining us. Who is trading this much currencies? I mean, is it individuals? Is it institutions? Is it governments? Is it everyone?
Well, first you should point that 4 trillion number you just gave. That's a daily number, not a monthly or annual number. And it can compare to the world GDP of about 60 trillion. In comparison to world trade, about 70 times as much business is done on currency markets as is actually done in world trade every year. So this is a big financial business. It's mostly done by banks, but now hedge funds and other kind of financial investors are getting to be a much larger share of the business. So it's people who are in one way or another speculating that are doing most of the trading.
And I guess it's safe to assume that because we've seen stock markets in most developed countries, the main indices falter, that more and more investors and more institutions are looking to diversify. Is that part of the motivation?
Yeah, that's part of it. Usually you don't just diversify into currency, although some investors do that. Currency becomes part of a whole strategy. So you're an American, you buy Japanese stocks, but you try and hedge against the risk of the yen moves the wrong direction, or conversely, you buy yen and sell stocks or something like that. So it becomes part of a complex investment strategy for a lot of investors. Often for very fast trading investors, they move in and out of currencies by the minute.
All right. Well, Edward, short and sweet, we thank you very much. Edward Hadas joining us there from the Financial Times.